Hello, I'm Mario Toneguzzi, managing editor of Canada's podcast. Joining me today is Matt Barr, a private equity manager and partner with Omnigence Asset Management in Calgary. Thanks, Matt, for joining us today.
Thanks for having me.
All right, let's talk about kind of the opportunity that exists out there for investors these days in this what's being called a tsunami of baby boomers retiring in the next 5 to 10 years. What is the opportunity and how big is it out there, Matt?
So there's roughly about $600 billion of small and medium-sized businesses in Canada that need to transact over, call it the next 10 years, which is really just a demographic shift in retiring baby boomers. And typically what we've seen is, there's only maybe 10 or 15% of those baby boomers that have a proper succession plan for their businesses. And so there's a big gap in the market currently for or opportunity, let's say, for investors to come in and start looking at some of these old world businesses as an investment.
Now, as you mentioned, that it's something that a lot of these small business owners, entrepreneurs don't think about that succession plan. Tell me, or what's the advice you would have for, say, a small business owner that is thinking that, you know what, I'm gonna retire and next year, maybe a year from now or so. What do you think they should be doing to prepare their business for a sale?
We usually recommend making sure you have an advisor. I mean, the process itself can be quite daunting for those that have not gone through it. So, I mean, we've done a lot of proprietary deals as well as through the advisor network. But we always recommend getting that professional help and support just because it does make the process go a little bit easier and a little bit smoother because it does, typically when you're transacting a business, it can take, upwards of a year to get a deal done. So it's better to have that support with you if you've never done it before.
And what are the key factors that make a business attractive for a company like yours to buy them?
So I mean, for us, I mean, we're a very much of a old world business strategy. So the businesses that we look at specifically are more businesses that have been around, 30, 40, 50 years. I think our oldest business is over 100 years old in Canada. And for that, I think what we look for is something that's stood the test of time through all the different economic cycles. They have strong cash flow, something that's not being disrupted with, let's call it, AI or tech. Maybe those things can help support the business going forward, but not high tech, high growth type businesses. And there's a lot of businesses in Canada that just they're family owned, family operated. They've been around a long time. They're great businesses. And that's the opportunity for investors and buyers coming in is to really target kind of that stability and low volatility cash flow.
Yeah. Are you finding a lot these days that those family-owned businesses, it's not being passed down, or because the kids don't want it, or
Yeah, I mean, that is a lot of it. I mean, there's a lot of cases where the kids have gone off. They're doing, different things, different professional careers, and they're maybe not as engaged. They didn't work in the business and they maybe don't want to be in the business. And there's also cases where the kids, are coming into the business or a relative, but they still kind of want that managerial professional support. And so that's kind of where we're able to, kind of parallel in and provide that support with them as they, transition out of the business without disruption, let's say.
is there any particular sector, business sector that you look at first of all, but more so that are becoming more and more opportunities out there?
I mean, every deal that we look at is more on an individual basis. I mean, again, for us, there's some things that we don't target, and a lot of it's, what we're targeting is the stability and the low volatility businesses that, maybe don't. Again, energy is something that we don't typically target, but we're looking at like master franchise businesses are very stable, low capex, very easy to organically grow if you have the right brands. We do a lot of industrial, like manufacturing and supply chain, but again, these are more physical manufacturing businesses where it's very hard to disrupt. That's kind of what our focus has been. And there's obviously a lot of businesses out there, but that's typically where we like to play in.
Okay. How long does it typically take for when say an offer is accepted, that whole process of transitioning a business to a new owner, like what is the length
Yeah,
of time?
it can be different depending on the business, the personalities, the relationships. Some of the different scenarios that we've participated in is we've closed a business in 120 days from a letter of intent. Where I think there's more value is kind of building a relationship prior to that LOI with, the owner, making sure that it's a strategic fit from personality and relationship and business. I think it's a better onboarding and integration process if you have that relationship compared to a simple financial or monetary transaction. There can often be misalignment for what the business owner expects. 90 days would be a very short window. I mean, typically we're probably 120 to 160 days once we get to the point where we have a letter of intent signed. But again, I think for us, we typically like to have as many conversations as we can before we get there to make sure that we're in agreement with what we want to do with the business going forward. We can educate them on the process of what it will look like because it can be a bit daunting. So typically under 6 months is a very achievable thing for us.
Are businesses more attractive to investors if there is like a set like management in place that can take over, say, when an owner leaves, as opposed to the businesses that are solely reliant on the owner?
For sure. I think there's opportunities for both. Again, if you're looking for stability and low volatility, obviously we like to have that succession plan a little bit longer. We've done closed deals on both fronts where we've slotted in new presidents and CEOs on day one. It can work and it does work, but I think for us, it's much better to have that, kind of 1, 2, 3 year transition period where the owner stays on. And typically, I think they like that as well because, you think of these businesses that they own, they've built them over, again, 30, 40, 50 years. It's like it's a child almost where they don't want to just hand the keys over and walk away. They have a lot of family, friends, and relationships
Mhm.
tied to that business. So
So tell me, Matt, when it comes to the deals, uh, is it tough for these guys, these owners, to take emotion out of it?
I'm sure it is. We've done quite a few deals and we've experienced both. I think there's some owners that it's harder to let go, and there's some that are supportive, and there's some that maybe it's a little harder for. But I mean, again, I think they're so invested. They've spent their lives building these great businesses, and it's not something that you can just, I think, turn off. It's ingrained in them. And so we make sure that we have those conversations and walk through that with them in the succession planning process. But yeah, it can be difficult. But I mean, I think our job is to help it be successful and smooth as we can be. But there's a lot of touch points and talking points to go through to make sure that we're able to execute that.
All right. Anything else you wanted to mention, Matt?
No, I think that's great.
All right, super. That was Matt Barr, who is a private equity manager and partner with Omnigence Asset Management in Calgary. I'm Mario Toneguzzi, managing editor of Canada's podcast. Thanks for joining us today.